Hey, this is Justin with daytradethemarkets.com on Tuesday, July 8th. And wanted to look at the NASDAQ today. I used 2 minutes on the NASDAQ and really talk about what we consider to be Rule 1, which is Rule 1 in trading, which is to avoid being on the wrong side of the market as much as possible. In other words, you want to avoid taking as many low edge trades as possible. If you did nothing more than improve the percentage of losing trades that you took, there's nothing that will help your P&L more than that. So many traders are so focused on the on entries, on setups, on finding this magical trade setup. We look at the market a little bit differently, and our tool helps you determine that. We try to determine which side is in control, which side is what we call one-sided buying or selling, or if the market's two-sided, then we adjust our strategy based on that factor. And so the first rule of thumb, before we even worry about getting into a trade, is we try to determine which side you don't want to be on, okay? Because we want to avoid doing the wrong thing, take care of ourselves first. So what I've done here is I've got a 2-minute NASDAQ chart, and I've taken off every indicator except for what we call our level 2 and our level 3 aggression bars. Just to give you a little bit of an overview, our software gives a lot of different what we call puzzle pieces, starting with these relative aggression bars. But we also, and I've left the level 2 and level 3 on there. I've gotten rid of the support resistance zones, the deceleration, the filter. I'm not even going to talk about the bigger picture bias at this point. I just want to talk about these relative aggression bars. That's what I've just left on the chart, and I've only left on what we call these level 2 or strong buying and selling aggression bars, and especially we want to focus on what we call these level 3 or extreme buying or selling aggression bars. And what these are telling you is that they're telling you basically what's going on under the surface of the market, looking at the time and sales, what the naked eye couldn't do, and transferring that information over to see which side in real time at any given moment, buyers or sellers, is more aggressive, because it's aggression that moves the market. And then we want to find out the degree of that buying or selling aggression. So is it strong buying or selling? Is it extreme buying or selling? And that following that can be a really strong roadmap for the likely direction of the short-term market. Okay, and so again, what I've done, just to be clear, is I've taken off all of the filter and the support resistance zones and its decelerations, and I've even taken off the level 1 bars, and I've just left these level 2. This red is a level 2 selling or strong selling. This magenta is a level 3 or extreme selling aggression. This dark blue is a level 3 or extreme aggression buying. The dark green is a level 2 or strong buying aggression bar. Okay, so what we like to think about when we're looking at the market is when we see especially a level 3 bar like we have here, so this is a selling level 3 bar, showing us that extreme selling is coming into the market. So we like to just look at the high of that bar and the low of that bar. And the first expectation would be that the high of that bar, that's where the extreme selling began, that's where the bears should, quote, protect their territory. So the high of that bar should act as resistance. So as long as the high of that bar is maintained, or, the low is taken out, we say that we're in more of a one-sided selling environment. Okay, so what does that mean? That means that if you're thinking about getting long, you're going to want to see this selling at least abate. And if you're thinking about getting short, it's certainly telling you you're on the right side of the market. So rule 1, avoid being wrong. Rule 1, when we're below a level 3 aggression bar, you want to be very careful getting long. Okay, you would need a really strong piece of evidence to kind of overcome that level 3 aggression. So then you can see we have another one right here. Okay, so again, we ask ourselves, can the high of that bar hold? Can we take out the low? Yes. We have another one here, kind of a short one. You can see, can the high of that bar hold? We took, we didn't get a full bar above. That's kind of what we're looking for, and then we were right back below it. The next one here, can the high of that hold? Yes, it does. Okay, so it's telling us we're still in a one-sided selling wave. Okay, so we just keep looking for these, especially these level 3 bars. If you don't have any level 3 bars to work with, you can look at level 2 bars, or these level 2 bars can at least give you a heads up. But we really want to focus on these level 3 bars especially. So here's another one. Here's a selling aggression bar. We get some, what we get is at the bottom of this bar, at the low of this bar, we do start to get some buying aggression. So this is our first even potential buying that's coming into the market. So we want to ask ourselves, can we take out the high of that buying? And you can see that it was rejected right away with another level 3 selling aggression bar. Okay, can the high of that hold? Yes, it can. So, let's recap this real quick. This is a pretty important structure right here. We had extreme selling, and the market auctioned low enough to attract at least a little bit of buying. So some buyers came in there aggressive, thinking that we'd matched our lows. So this is an important kind of structure that we want to look at in the market. However, we did not get any follow-through on this bar. In fact, there was rejection within 2 or 3 bars, and it was done so on another level 3 bar right here. Okay, that's telling us that this attempted move higher, or attempted, push by the bears, or excuse me, by the bulls, failed. It was rejected. We had another level 3 selling bar. Can the high of that hold? Yes. Can the high of that hold? Here's another attempt. Did the market auction low enough finally to attract some buying? If so, then the low of this buying level 3 bar should hold, and then the high should be taken out. And that's what we would define as this market going from one-sided selling, where every selling aggression has follow-through and every buying aggression gets rejected. Okay, so that's one-sided selling. It's telling you, if anything, you better be on the short side. Okay, at least if you're a short-term day trader. Okay, so this is a next push potentially for this market to go more of a two-sided market, for buyers to show at least some strength. You can see that it was rejected again. Here's another level 3 selling aggression bar. Let me clean this up a little bit just to show you. Here's another level 3 selling aggression bar. Can the high hold? Well, yes. A little bit different here. We around 51 or so, we did have some longer term support potentially coming into the market, so it's not surprising the market did find a little bit of support, but I'm not going to really get into that at this point. But you can see here we did get some immediate follow through, came back to almost to the high of that bar, to the 50% bar, sold off, but couldn't make new lows. This is the first time we couldn't make new lows. Okay, and then we started to see a little level 2 buying come in, and we started to get a little follow through. Then we get this is our first level 3 buying aggression bar that has follow through. So instead of immediately rejecting and had taken out the low like every other level 3 buying bar has on the selling wave, we start to get some follow through above. So what's that telling us? It's telling us at least that this wave of pure selling, one-sided buying or selling, has at least come to an end. This is our first heads up with these level 2 bars in there. Now we're at least more two-sided, and this is our first clue here with the follow-through on the level 3 buying bar that we could be, at least in the short term, turning the corner and becoming more in favor of the bull. So then we would want to ask ourselves, can the low of this bar hold? Well, it tested there a little bit later, and it did. This one here is right at the cash close. You have to take any level 3 bars right at 4 o'clock Eastern with a grain of salt. But again, that's the idea here. So if we kind of define this and look at this, we had a really strong wave of selling where every extreme selling aggression bar had follow through and every extreme buying aggression was rejected. That's a pure wave of selling at this point. Starting around in here, we go a little bit more two-sided when we start to get a little follow through from the buying, and the high gets taken out right in here of this level 3 bar. But I would say that the pure wave of selling was here. Then we started to go, however you want to define it, either two-sided or more buying controlled right in here. Okay, so again, this is a much bigger box right in here. We would want to see, really, for us to say the bulls have really taken over, we would like to see them go and test and take out some of these earlier selling aggression bars. But it's showing us, again, in this box, so to speak, when there's pure selling aggression, again, selling has follow through, buying has rejection. You want to be very careful if you're trying to get on the long side, and if you're on the short side, you're more on the wrong side, or you're more on the right side of the market. Here, it's more either two-sided, or you could say that buyers have taken over at least short term, and you'd want to be careful being on the short side, or you'd want to be more of a fade type of a trader when you can get the opportunity to see some consolidation. It's at least telling us this pure wave of selling has at least come to an end. Okay, so again, that's what we call rule 1, is avoid being on the wrong side of the market. Hopefully that makes sense. To some people it will, to some people it won't. But that's the idea. We have this pure wave of selling. We know, and I'm not even getting into trade setups at this point and ways that you can do that and how you can kind of balance your risk versus the quality of the opportunity in the market. Just want to talk about this kind of first level of avoiding being on the wrong side. So how do you use that? Well, there's a lot of trade setups that we use with our software, or if you already have trade setups that you use, just simply avoiding taking bad ones is going to do a big, be a big help to your P&L. So that's kind of our step 1, or our first building block foundation of being more accurate in our trading and staying on the right side of the market more often. So hopefully that makes sense. If you have any questions about that, let us know, and we'll talk soon.